Hi guys, it's Ian Coleman. It is Friday the 11th of June 2021, 9:39 in the morning in the UK. Real mixed bag out there at the moment. News wise, we've got the G7 starting today in sunny Cornwall. Not really expecting many news bombs to come out of there. Looks like the UK is likely to miss the 21st of June grand reopening with more COVID cases across the UK. But apart from that, it's all pretty mixed. Let's go to the single currency charts, and again I'm going to sort of highlight what I'm seeing, support and resistance levels. But this is my morning pad, and you can see across the top there we've got the dollar mild bullish bias. We've got the euro completely mixed. One signal's telling us to sell it, the other's telling us to buy it. Then we've got mixed sterling. We've got a sell in Swiss, and we've got mixed in Japanese yen, Canadian dollar, Aussie dollar and New Zealand dollar. So when I sort of say there's not a lot on the horizon, or why concentrate on euro dollar when there's other currency pairs to focus on, this is a typical day, and I'm going to explain why when we get to the chart. So let's have a look at the single currency chart. So here is the euro. Okay, we're sort of, I'd like to say we're mid-range. We talked about this yesterday, the fact that this is our sort of prime resistance going up here, 622, and it lines up quite nicely up here. We talked about that. I suggest if you missed that, I'm not going to waffle on again about that again this morning. We're in between support and resistance, so basically we need to break this level here, and it's holding really well to these levels, so we need to break this level here to take euro higher, and it needs to hold support here to hold a mildly bullish bias. So at the moment we're sort of in a range. I suppose my preferred trade, or my preferred bias, if you like, if I had to have one, would be to, only because I think this pattern might play out, and we talk about risk reward, so I'd prefer to be long of euro at the moment than short, that's for sure. Dollar index, and here is trying to find the pattern that is going to complete, and we'll keep on going back to this reverse head and shoulders, but this could get all the way down here, and it's just really mixed. I mean, this is an 8-hour chart, and you can just see since that sell-off that we had on the 4th of June, which is 7 days ago now, we've just really tracked sidewards. We've got some resistance here on the intraday resistance. Is it going to push lower? I mean, if that happens, if we hit that resistance level and euro dollar hits that support level, then obviously there's more chance of euro dollar going up than it is going down. But these signals aren't far from strong, and in fact, even if we react lower from here, I'm wondering whether or not we're just going to get up to sort of this zone before we get buyers return. So again, the dollar's really mixed, the euro's mixed, sterling. And here I've put on resistance and support. So impulsive move to the upside yesterday. We've got some resistance here. We've got support here. Now, with this lining up with 161.8% and possibly forming like a reverse head and shoulders, so this will be a left shoulder, this will be some sort of neckline head, and then coming down to a right shoulder. I think the support is preferred to the resistance, but we could play off both probably today. Swiss Franc is the one that we talked about yesterday. So big picture, big picture, big picture. It's starting to come off quite aggressively now. 30049 is the bespoke resistance level. Again, if you didn't see the video, please have a look at the one that was posted last night, quite late last night, on Swiss yen, because we talk about the Swiss bias there. I've got resistance, I have no support, which I quite like saying that. So this is the favoured pair, or or the favoured single currency for me today to be playing, and I'm going to concentrate on that when I go to the normal charts, if you like. Yen, again, it's got a bit of a mixed picture. This is what I want to see, which is a move to the upside. However, there is scope for a move in either direction, and we need to break this resistance level here to continue that 4-hour chart higher. Okay, it's mildly bullish, but we need to break through here. If that doesn't happen, then we could see a deeper correction down to here, which is 1944. But the signals, very mild signals in very short time frames, are highlighting that that yen could bottom here, and that's why my focus is basically on sterling yen. CAD, boring, in no man's land, possibly forming this pattern. I haven't got any resistance, I haven't got any support, not bespoke support or resistance. So again, I'm trying to find the pattern. I'll look for resistance levels up here, and I'll look for support levels down here, but at the moment it's pretty much in no man's land. This could be quite interesting. This is Aussie dollar. We've got some resistance here at 1655, and it lines up with this 50% pullback level. So again, if I get reversal signals there, I can have a look at Aussie. But when you think about correlated pairs, I'm bearish on Swiss Franc. This is potential to be bearish on Aussie. I want them counteracting. I want them going in opposite directions, not the same directions. So I might struggle to get a counter currency, even if I get up to this resistance level. And then New Zealand dollar, it's just messy, but mildly bullish, should we say, and just mildly bullish off this level here. If we go to this chart, I do have some support in New Zealand dollar down here. So that basically means that I could, let's just pull this in a bit, I could potentially see this pattern. So again, Aussie New Zealand might be one to look at if and when we get to those correlated levels. So let's go to the currencies. It's made a mixed bag for euro dollar. I've got some support here at 121.67. We're just holding on to it at the moment. If that doesn't hold, then I'll be looking for a sort of deeper correction down towards the 78.6 and 88.6. Again, what have we talked about? It's all about risk reward. Everything. Your money management is key. So, say if I decided to take a long here, I had to put a stop down here. You know, 2R, 1.8R, you could take it, but it's not half as good as getting it down here, which then comes in at 6.8. So at the moment, I'm not bothered about euro dollar. Sterling dollar, again, I think this is what we're playing out. I still think we're playing out this head and shoulders. So left shoulder head possibly coming higher in the right shoulder. Using correlation and using support and resistance. There is support here, 141.42 on my bespoke system, but do I want to be just buying into that correction? I mean, if we put a line across here, so we can see that we're hovering there. So if we hover there, you know, your sort of risk reward factor again is pretty poor. Swiss francs, so what do we talk about? We talk about pullbacks to 88.6%, and the fact that if you catch them and they're correct, they can yield some very decent R. So this basically, if you're looking at dollar Swiss this morning, and of course you would have had to have a bullish bias in dollars, then this could be your risk factor, and up here, possibly up here, could be the reward. So again, that's just based on the Swiss franc. It's not based on the dollar, but it looks like it could reap some rewards. Euro Swiss, I just want to go through these charts just to show sort of correlation. We talk about correlation quite a lot. So you've got a confluence area down here and that's starting to move to the upside now. I prefer it to touch. I don't have any signals, so it's not my favoured pair, but you can see that Swiss franc is starting to move lower, and again here on sterling Swiss there's potential for a monster move to the upside. I don't think we'll ever get there. You should never say that in trading, really. But again, the 88.6% pullback level just here at 126.09, offering a favourable sort of long entry. If you're looking at that, I'm not looking at that, I must admit, because I don't like sterling to the upside, so that's not one of my favourite pairs. But as I said, you know, the cross currency that I looked at, or I have been looking at for the Swiss franc weakness, has been Swiss against yen, because there's decent potential there. So basically, to reiterate what I'm seeing on the horizon, we've got a mixed bag really in the dollar, with a potential intraday cap. Euro, we've got a mixed bag with a potential, and it's just forcing onto it now, with the potential of an intraday support. Sterling support is down here at 161.8%. Swiss we've talked about, it's starting to turn over. Yen, again, we need to break levels. So mixed bag in all the single currencies has resulted in a pretty mixed bag in most of the FX majors and FX crosses, with Swiss franc being the favoured single currency this morning. Okay guys, sorry I can't be more bullish, more bearish, more positive maybe I should say, with regards to current analysis. I think we're going to see some sideways price action for quite a while. Okay, good luck, and I'll be back soon if I see some more insights. Many thanks.